Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, May 15th, 2019. Start out with the broad markets. We'll just kind of touch on it lightly. I've covered these pretty extensively recently. So right now we're really between a rock and a hard place, or support and resistance. We have the 180, the purple lines that I listed as my bounce targets. And again, yesterday we had that pretty strong ramp up into that 181.13ish level, followed by a failure there. We had a brief momentum fueled overshoot, and that's fine. We had a lot of upside momentum coming in, overshot it briefly, and came back down. However, remember on the daily chart, and daily charts take precedence, in my opinion, over the intraday charts anytime you go out to a longer term time frame. And so the thing there is we hit that 178 support level on Monday, and we've traded above it since. And as I say, support is support until unless broken. So maybe this is flagging type action now here. I'll draw it out for you on the daily chart. Maybe not. Maybe it's just the market's defending that level. Either way, it's a reaction, and you would expect a reaction. Remember, Qs were very oversold. This is the biggest correction that we've had in all year. So therefore, you have to expect something. So let's watch it, and it's pretty simple. If we take out 178 with conviction, that would open the door to the next downside or next target. But I still favor. I'm leaning towards a run up here to that 182, at least that 182.76 level, favoring more upside for now. And maybe a back test of the trend line here. And again, wouldn't shock me to see us come all the way up here to about that 185.53 level. We start to get above there, maybe something else is going on. Let me show you one of the things that keeps me, on that bullish side. Is in the trading room yesterday I mentioned two stocks in the FANGs, or what I call FANG-E, if you add the I at the end, for Intel, which was the sixth largest component. It may be number 7 now, close, is Alphabet and Intel. And they both have very strong bullish divergence. Now it's confirmed on the 60-minute chart. So I'll just point out, if any two stocks to trade right now in the top 5, it'd be Alphabet and Intel. And you can see already Google came off support here about 128. This is 60-minute divergence. This could lead easily, lead to a pop up here. That's about almost 5% upside. So I like Alphabet, and that's one that I'm along with NQs right now. And then Intel too, INTC. Again, big divergent low here. It hasn't reversed yet. I know what you guys are thinking if you're short the semis. Well, Intel led the way down. I'm not going to change anything. Again, there's not enough. Oh, there it is. There's my lines. There's not enough evidence in the charts to change, the trading plans on SOXX short or QQQ. But we could bounce here soon. And let's see what Intel looks like on the daily chart. Deeply oversold. Now the thing with Intel is it hasn't hit. It would be a much more, I'm not in this one because it's so close to this 43. That's a very solid support target that I've had for a while. If we hit that level, it's really a support zone, 43 down to 41.64. But if we hit that and those divergences are still intact at the time, meaning they can simply extend out, then we might have a trade here in Intel. But as of now, it's one to watch. Again, these divergences could play out. But again, Alphabet alone is a big enough player in the FANGs. And so far, they're stepping in to buy Alphabet right there. Here's a daily chart of Alphabet. This one's probably a mess because of all the trend lines. But you can see there was had a trend line off the highs here. It's not super valid. We had a couple reactions there. We kind of went through it there, back testing. But more so, I guess what stands out to me here, other than the divergent high, foreshadowed the correction. There was a divergent high and a double top failure. That's a pretty powerful stuff, and so therefore you had the correction. Yes, it was earnings induced, the gap down, but the technicals, align with fundamentals, and that's just the earnings was a catalyst to trigger the correction after that divergent high and double top failure. And right here you can see I have a support zone. These two levels here come in, and you can see pretty well defined. So we snapped through it briefly, back above it, And so as of now, and oversold. Here's the last time Intel was, or Alphabet was oversold. Actually put in a divergent low, came in, made a higher low on the RSI. We had divergence here. So we don't have divergence here. I'm not looking for the next buying up on the road to new highs. Let me make that very clear. But if those 60-minute divergences play out, let me just put an X there. That's not what I'm looking for. We could get a tradable pop. But again, let's not beat a dead horse on this. We're stuck between support and resistance, and this market could go either way. We could fail here again at 183.13. Just because we failed once and came up and tested doesn't mean that that level's been taken out yet. We tried again. 60-minute candle has been rejected. We tapped yesterday's highs. You can see right now as I'm doing the video, and the fact the fat part's down below, it means we were rejected. So that's kind of the intermediate term of resistance right here, about 181.60. And then SPY, let's not forget before I move off the equity indexes, I had the same similar overhead resistance levels, a price channel. SPY's still within there, and SPY actually is lagging today behind QQQ on the bounce, still down. But again, those are the levels that I talked about yesterday. And remember, we still have that key 281-ish level right there on SPY, which hasn't given way yet. So there's the downtrend, but a break of that downtrend line or price channel there, and break above 281.41, or more importantly, again, yesterday's highs could bring SPY up to this level here. So it can go either way. And remember, there's been a lot of technical damage inflicted on the charts. So sometimes when you start to see a rally, everything looks good, breakout, you think it's green lights across the board. Don't forget the more important daily charts and weekly charts and a lot of the technical damage that's been inflicted. Because sometimes just as things start to look good, they turn around and start selling into it hard, and you get the next leg down. But as of now, like I said, I'm near-term cautiously bullish for today. Let's just see how things go from there. Other trade ideas, I mentioned wheat. I've been tracking wheat. I posted wheat a week ago today, actually, within this bullish falling wedge, and got it out there today as an official trade. That's first target's not very, you might want to, I expect a reaction there. I wouldn't have listed it as a target. It's the same target from last week. Maybe get a reaction there. But sometimes, I'll tell you, I've traded these commodities for years. When they finally get some traction here, when they finally put in a bottom, and wheat's looking pretty good, they can really run, and they can blow right past targets and all that. So I can tell you personally, although I'm trading wheat futures, I'm looking for more of a move up here. We'll ride out any reactions unless I see something compelling in the charts. That's the final target for now. T3 at 576. I may tweak that because wheat, this ETN tracks wheat futures, and that's what will dictate the chart. So sometimes as prices continue to move up, if the trade plays out based on the resistance or the level I expect to reverse on the futures, I may tweak these targets. One little side note on wheat, it doesn't trade 9:30 to 4 p.m. This does. This is an ETN, but you're going to notice, I think it's like 2 o'clock Eastern time. Maybe 2:20 p.m. Eastern time, wheat futures stop trading, and then they open up again later on that night. So keep that in mind. You're going to notice, when you're trading, if you're trading this ETN, it kind of volumes taper off, and there's really no movement after that point because the futures itself haven't traded. So just keep in mind when trying to enter and exit. And also, anytime you're trading an ETN that doesn't, or any security, look at the bid and the ask price. If they're not a penny or two apart, you'll want to use a limit order to get in, and you typically want to use limit orders to get out at your preferred price target as well. So there's wheat, what I'm watching. And next, geez, wow. I just posted this in the trading room. Hold on, I've got to close out my position here. Hold on one sec. Okay, I wanted to get this video out. I posted, here, I'll find that chart for you. Okay, here it was. PA posted this in the trading room just an hour ago. And trying to get everything out. I usually put orders. Sometimes I'll just get back, put a stop in place, but I didn't put an OCO order on this one, and it already played out. So 1304, I said it had dipped just below support, but offered. I said it had come full circle. If you recall last week, I also posted this in the trading room. I think I might have mentioned on the front page too as a trade idea, but I posted it right here as a breakout, long entry on a breakout above the downtrend line right here. Plus support. I love when I see trades with intersecting support levels, or resistance levels, I should say in this case, to take out. So it took out both the downtrend line there and that 1304-ish level. Had a quick run up here to my target at 1351. Very profitable trade. Did it again today, and the fact it was below, I said not a big deal because it spikes below. It had a couple spikes below before, and said just a long entry here. It's come full circle back at support, and sure enough, that ran up quick. That's just one contract. That's what, $4,500 in profit in 1 hour on a single contract. But it's now kind of well. Here's the thing. All right, I only brought it up right now because I didn't realize it had moved up that quick since I started the video. But that's resistance again. It already pulled off back from there once, hit it again, pulled back a little today. Let's get back to the live chart. That's again the chart I posted an hour ago. Where did it go? Hold on one second. Okay, this is the live chart. So another kiss of 1351. So now at this point, we tapping on this level. And remember, the whole catalyst back here was the divergent low. We put in a divergent low right here. Then we broke out. We came in. This was a back test of the breakout level and support. But now at this point, I'll be looking for, and I may re-enter this one long again, on a break above 1351.50, or we'll call it 1352 or so. So right now it's sort of basing here in this range. If it can break out, that would be bullish. And targets, I'll have to study this a little more, but I'd probably be looking. It's a pretty powerful breakout. Maybe a little stop along the way right about here, and then maybe a move up to this level here. So that's PA, one to keep on watch. It's already pulled back a little bit since kissing that almost a perfect kiss too of that 1351.50 target. Was same target from last week, or was that just Monday? I believe just Monday. Okay, and loop back to wheat real quick. Here's a futures chart. So that's probably that roughly correlates with that T1 level on wheat here. So maybe a little reaction here, but then there's the next target, and that I'll have to scrub the charts and align them, but that might align there with the second target level on WEAT. So again, these are wheat futures. Keep in mind, like I said, they'll shut down for a little each day, around 2:20 I think it is, and then pick up later that night and trade most of overnight. But you can see, here's one of the reasons. Again, if you're, I like to always confirm that the futures look good. You had a nice downtrend, price channel, falling price channel there. There was a breakout, and these are the things I look for. It's simple wash, rinse, repeat stuff. There's more to it. I shouldn't oversimplify it. I'll look at daily charts. By the way, I have to load stock charts. I don't have it up yet. I have wheat at a very, very long-term, multi-year, maybe even a multi-decade uptrend line pulling back. So it's at very long-term support on wheat futures as well. So this time around, same thing. We have a falling price channel, bullish divergences, and breakout. And I've been mentioning wheat now for the last few weeks here since this divergent low was in. So it's come on right through, taken out this. It didn't even hiccup at this target. Now, see, that's my point here. That was a solid resistance level, well defined, and it just went right on through there. At this point, probably get a little reaction here, but I still like it at least up to this level. That if you're trading wheat futures, about 475 or so, maybe a little higher. There are a couple little higher reactions there, but to be safe, you want to always take profits on longs a little shy of the actual resistance level in case the buyers step in early. And then I should clarify too that once that level goes, this is a big basing pattern. We're only looking at a 60-minute chart here. I would then expect a move up here to about that 511 level, which, let's see if I can roll back a little farther. You can see, it does a pretty good job, pretty decent, and it's pretty thin between there. Thin meaning not a lot of trades. This is a thin zone in here. We drop down quickly to backfill that thin zone. So I think this trade will play out something along these lines. I guess once we get up here, maybe a little consolidation to be healthy, and then a punch on through there for a pretty quick move up to that level there. So we'll see. Commodities have just had a hard time getting traction. They've had a few, breakouts. They've been in a vicious bear market for many years now, but sooner or later, I think especially if the equity markets roll over, money's going to have to find a home somewhere, and these commodities are beat down. And remember, commodities, I know there's trade wars going on, all that's affected, played into this recently, probably delayed the bottom of the bear market in the commodities, but they get to a point where there's just inherent value, and you don't have to worry about commodities going bankrupt or corporate malfeasance. It's a commodity, so there's an intrinsic value to it, and there's they're never going to go down to zero. And all we know now is they're down towards multi-year lows, so they're starting to really look compelling. A lot of these individual ag commodities, and they all have different charts, so we'll have to trade them and treat them differently. And by the way, corn as well. Here, let me grab corn. Corn tends to run with wheat. The two are pretty correlated. Obviously, they're alternative grain, feed sources for livestock, things like that. So they both tend to move together. In corn, here's corn ETN, big divergent low right here, and it's been moving up sharply recently. That's pretty powerful stuff. This could be bottoming action right here in corn. About a 7% rally in the ETN just the last couple of days, right at resistance now. I can add that. I can tell you if I do add it, keep this in mind, it'll be an overlapping trade. So by that I mean it's like trading QQQ and SPY. QQQ will go up and down a little more each day for the most part than SPY, but you have a high correlation there. If you're trading wheat and corn, take that into consideration in your total portfolio size with each position. Now another alternative, you want to kill 2 or even 3 birds in one stone, go with JJG. That's a grain ETN. It holds corn, wheat, and soybean, I believe it is, all 3 together. And soybeans, if you want to trade that individually, that's moving too. And it will, because again, these grains tend to move together. So there's soybeans, deeply oversold, bullish PPO on the RSI, so I think I've made it pretty clear I like the grains right now. Whether I get these out as official trades or not, like I said, there'll be a lot of overlap, but JJG is a little thinly traded, but again, it's easy if you want to just have exposure to grains in your portfolio, or you can trade the individual ones. And I can see this one, soybeans, and this one can run. Traded all of these for many years, and don't underestimate how quick they can go up once they tend to be one-sided trades at points where there's a lot of, for whatever reason, you get these very sharp moves down and you can get very sharp moves up. And oversold can become much more oversold in ag commodities, just as overbought can become much more overbought. All right, so that's the commodities, or at least ag commodities. If you're in the USO trade, like I said, this is just, it's kind of grinding sideways. It has support right below it, a lot like the broad markets. And, it's had some cross currents. We'll leave it on. It's still an active trade. I believe there'll be more downside, but we do have mentioned PPOs falling down to the 0 line here, and that often acts as support. The PPO signal line, that's what I look at here. So we have the 9 EMA, PPO 9 EMA, coming to back test the 0 line from above, and when that white line, the 0 line, is above the white line, the signal line is above the 0 line, it denotes a bullish trend in crude oil. And when it's below, bearish. So there's work to be done to firm up the case, but I'm still, we're still sitting tight. I'm not changing any of the trade parameters. Keep in mind, if you're in DWT instead of USO, this doesn't play well for 3-time leverage ETFs. This is where the decay kicks in, when you get caught in a sideways trading range or extended consolidation period. So USO, you won't have the decay that you will on the 3-time leverage DWT. Just food for thought. But since we hit the first target way back, was it here? Yeah, back here, we've consolidated. That level's acted as resistance, and I gave you the same yellow expected bounce target. So far, we failed at a bounce to that 13-18 level. So to simplify it for you, and this is our recent range right here, and ideally we need to see a break below. We have the second target not far below, and if that level goes, that would bring us down to our third target, whereas an upside break could potentially test more of these bounce target levels. TLT, again, unofficial trade, but I've covered it so many times, even listed price targets. It's so still doing well. nice, again, as it should when there's weakness in the equity markets. Plus, this was as every bit as much technically based, and just continues to advance nicely. Now it is coming up to that previous reaction high. We do still have the divergence that was in place at that divergent high, as I mentioned. I told you I expected the divergence to simply extend. Ideally, this is my ideal scenario, see a move up there and then a reversal. We might even short TLT at that time, but as of now, still looking good. Let's wrap it up here. This keeps it right under the 20-minute mark, and I covered some of the things that stood out today or stand out today, and I'll follow up maybe, if some look like official trade ideas, like maybe some more of the ag commodities, I'll take a look at those. Platinum, if that gives us a run. Gold, I'll do gold in another video, but I still like it. I still have a core position, and I'll trade around, still waiting for a breakout or breakdown in the dollar, which is the same thing as a breakout in the euro US dollar pair above these downtrend lines. So getting very close. I think it's imminent. I look at the divergences, I look at everything else. But here's the thing: if we get another, little upside in the market here, those support levels hold before the next leg down, it might delay a breakout here. But sometimes gold can march to its own drumbeat. You don't have to have a falling dollar, but it certainly helps. And this would be more of a entry for a trend trade or a long-term trade in gold if and when we get this breakout in the euro US dollar. So let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.